Hello investors, welcome to Proximo, the Value Stock Analyzer. Today we're going to do a quick rundown on the state of Carvana. We did a video on Carvana about 3 months ago. You can see here when we did it, the price was at $4.83. There was a lot of news articles about Carvana and their potential bankruptcy. When we fast forward to today, we are at $7.54. Let's see what's changed. But before we get into it, please give us a like and subscribe. Your subscriptions really do mean a lot to the channel and allow us to continue making content for you. Also, please be sure to check out Proximo.com so you can see this analysis for yourself. So like I said, the price of Carvana today is at $7.54 compared to when we looked at it 3 months ago, $4.83, just under $5. What has changed? Well, not a whole lot. If anything, more negative indicators in my opinion. If we come down here, we can see that year over year revenue growth, they did $12.81 billion in revenue. When we looked at it last time, they just finished their yearly reportings and reported $13.6 billion, which is an increase of 6.17%. More revenue is good, right? Well, not on the heels of negative net income. Last year they reported minus $135 million in net income. This year minus $1.59 billion in negative total net income. Ouch. Nowhere near profitability for Carvana, unfortunately. If we come over here to the balance sheet, we can see last year they had $300 million in cash and cash equivalents. This year, $403 million. Also good, right? We have this huge increase in assets because of an acquisition. But what about debt? Let's scroll down here and we can see total current liabilities skyrocketed from $467 million to $289 billion in debt. If we take a quick look at the scorecard, we can see their liabilities over assets is 0.93. Again, we say that sweet spot is 0.3 to 0.6. Anything less than 0.3 would indicate that they're maybe too conservative and not leveraged enough. Anything over 0.6 and they might be over leveraged beyond the point of being able to pay back. At 0.93, they are well over, they are 50% over that margin. If we take a look here, the Motley Fool recently put out an article about Carvana down 95% from its 52-week high. Is it time to buy? The article basically summarizes probably not. Carvana was a high-flying stock until it wasn't anymore and is now down about 95%. The company is losing money and has a lot more leverage than it had in earlier days. Management believes it can turn things around as it shifts to focusing on profitability. They are focused on profitability right now, trying to improve those margins, increase that net income to the point where they're not being bled dry. One of the problems for Carvana, in my opinion, is the used car market. For the last 3 years, we've seen a supply problem with cars where supply was limited, demand was equal, and therefore prices were very high. High prices for Carvana is good because they can improve their margin for every single sale of cars. In fact, if we scroll down here, we can actually see, so the company wants to complete an annualized SG&A reduction of over $1 billion. That's sales, general administration, $1 billion compared to the first quarter of 2022. Great, that would help their net income a lot. Gross profit per unit is expected to have troughed in the fourth quarter 2022, with future quarters showing improvement back towards GPU of $4,000. Again, that is the profit per unit, profit per car that they are selling. The problem, again, with used cars, we've seen lower supply than demand, therefore prices are high. We're starting to see that level off, and this is pretty basic economics. When you have low supply and high demand, prices go up. The market reacts to that by increasing production and increasing supply, and then when you have that increasing of supply, prices start to drop. Again, basic economics. This does not, in my opinion, lead to a very good future for Carvana because if prices start to fall, there's going to be more competition. It's going to be hard for Carvana to continue or to get that gross profit per unit at $4,000. Anyway, that's just my opinion. Would love to hear yours in the comments below. Let us know what you think. As always, a like and subscribe would be very appreciated, and we'll see you in the next video. Go find some value.